We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We try to drive on them house roads.
And we're live with Nick Black in 5, 4, 3, 2.
Pew, pew, pew. Man, interesting day. It's been an interesting last 24 hours. For those of you that haven't been following the fireworks, there are plenty. So Brandon and I are going to talk about that before we even get anything going, because this is the biggest news that you don't know is news. That is definitely news that we weren't sure if it was news yesterday. So for the heavyweights, just real quick, little news announcement. You guys got early kind of advance of the interview with Dr. Ben Gortzel. So Brandon and I got to interview Ben Gortzel. It was pretty awesome. Overall, what did you think of that interview, Brandon? Was it fun?
Dude, that interview was awesome. If you guys, oh man, the digital heavyweights, you guys got a great opportunity to see that thing. That guy knows what he's talking about. And what you guys didn't see, for about 30 minutes prior to the interview, he went off on some other subjects too. That guy is ahead of our time.
Well, remember, we were talking about hypercycle.
I know. Yeah. The guy was
hypercycle is going to be,
yeah. And
you will get hypercycle tokens. Again, hypercycle is it's a new site. It's going to be it's kind of a protocol. It's a layer. I don't even know what it would be, but it's a Cardano AGIX project, which is a very lightweight protocol, which will have varying degrees of surety, security, transaction throughput, and different consensus mechanisms for different problems. And the way it was basically explained is that the amount of consensus surety you would need, firing a neuron versus which you may have like in a computer modeled brain. Imagine a brain that's modeled in a computer environment, in a software environment, and you have a neuron firing, one of 3 billion neurons firing every fraction of a second. Well, maybe the surety per transaction, you don't have to be as secure per transaction. You can have some amount of failure of transaction. It's not that important. So you can run really lightweight transactions with very minimal data, just like A to B, A to B, A to B, versus $1 trillion stablecoin transfer between two nations or two banks or something like you might see in repo, 100 million, 100 billion, 250 billion, whatever. Well, that transaction, you might need a lot higher level of security. You could imagine in that case, you might go to something that looks a lot more like proof of stake, with all the stake pool operators involved, a slower transaction time that's incredibly secure because you got to make sure that one goes. And so it's very interesting, hypercycle. And by the way, if you are an AGIX owner, and that's Singularity Net, the token, you, by owning that token, holding it in MetaMask or staking it at Singularity Net, or here in a few weeks, staking it on Cardano via Singularity DAO. There's a lot here, but anyway, go into some of the other episodes of the heavyweights for the explanation. But if you own AGIX, the token, you will receive airdrops of all of these vertical companies that they're launching at Singularity Net. And Hypercycle is just one of them. And there's a bunch coming. Hypercycle, Mindplex, Rejuve, Sophia DAO, like ching, 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 ching. Just go down the list. There's all sorts of cool companies. So I don't know. After you saw that, were you more or less bullish, Brandon? Were you bullish artificial general intelligence? Were you bullish narrow AI? Were you or bearish, or were you bullish or bearish Singularity Net?
Well, after seeing a bullish AGIX, bullish for sure. Just because if you see it's one of your core values. If you see a team that cares that much about what they're doing in their project, then you have to be bullish on what he's saying, and in turn be bullish on AGIX. I think, my wife was sitting here listening to the interview too, and I told her right then, we're getting some more AGIX. So
Oh, dude,
Personal.
let me tell you this. This is not financial advice at all for anyone. I'm telling you what I'm going to do. We had one of our cars flip, well, you don't even know all that. Anyway, occasionally when cars wreck in the rental business, you do all right. Depends on how you buy it, right? If you buy it right, you end it right. And one of our G-Wagons got decimated. Ergo, insurance check. Ergo, a big old fat dump truck full of AGIX. Again, not advice. I'm just telling you what I'm doing. I don't care what you do. I mean, I do, but I don't. All right. So that interview will go for tomorrow. That's going to get sent out to the AICI members. So you'll all have access to that. Cool. All right. Okay, let's talk about what's going on right now. Okay, so let's set the groundwork, Brandon. What did we start hearing about a day and a half ago that was kind of a little bit weird? Some little back and forth between CZ and Bankman Fried Chicken. Do you want to give a little context?
Basically, CZ was calling out FTX for lobbying, doing some things behind their back. BNB threatened to sell all of FTX's token, dropping it 32% on yesterday. I think yesterday the token dropped 32%. So this morning, AM, the rest of the markets got super scared because they thought, oh, there's going to be liquidation events. FTX threatened to halt people's accounts. What?
Wait, now talk
Am I getting
about
too far?
why the liquidation was so. Why were people talking about liquidation at FTX? I mean, they have all the money in the world, right?
I don't know. Maybe having gone through Celsius and Three Arrows Capital this year and some other things, people are a little skittish about these exchanges, about these little places that hold our tokens safely, supposedly. So,
well, and not only
people
that,
are going to make a bank run.
Now, do you also know? You may or may not know this. Do you remember the little birdie that dropped a copy of their balance sheet of FTX's balance sheet a few days ago?
Oh, really? No, I don't know this.
So apparently they are super leveraged between probably can't imagine this. Solana, big surprise, their own coin.
Classic.
And then
of course.
I don't know if they borrowed against their own coin, if they borrowed against the FTT token. So Alameda, whatever, is their like VC firm, and it's all connected. It's all stuck and gummed up. They were deeply, deeply part of the scammy VC network that pushed Solana on everybody. We see how that worked out. It worked out good for them. It didn't work out so good for everyone else that was buying Solana up to 200. Never mind that the network continued and continues to crash. So I'm not going to bash Solana. It bashes itself. Lying, cheating, stealing, all that. So he's involved. He came out. Oh, real quick, Brandon, say 5 years ago, had you ever heard of Sam Bankman Fried Chicken?
No.
Not
this guy.
Do you know anything about his origin story? How he became such an amazing trader? And by the way, real quick, if you listen to Blockworks News, they're his biggest supporters. Oh, but wait, because he donates money to Blockworks. Oh, weird how that works. They're also big supporters of what is it? Solana. Weird that they still support Solana. Oh, that's right, because FTX gave them an S box full of money. So anyway, so he comes out of nowhere. I guess he's been given this name of this genius trader. He's genius because apparently he's been in Singapore behind a computer. And while the markets were quiet in 2017, well, 2017 they weren't, but 18, 19, and 20, he was just trading, just arbitrage trading, nascent markets, illiquid markets, arbitrage trading. He's such a good trader, he made billions of currencies. And then because he's such a dang good guy, because he just loves the world, really, he just decided that instead of just being a billionaire that he made in markets where there wasn't even that kind of money to be made, but he made it because he's a genius trader again. He just decided to create the exchange, to start buying up little exchanges, all this. So that's his origin story. And then all of a sudden now he's lobbying. He's got all sorts of money, $700 million to change the name of the Staples Center to the like FTX. I mean, no, that was crypto.com. What did he do? FTX put their name all over everything. They were sponsoring everything. Anyway, all this money they just lit on fire. And then it turns out that maybe they're borrowing against their own made up token. So the FTT token, which has no value, well, technically it has a value of, let's see, $16. So CZ Binance, he pops out. So this is a few days ago. Their balance sheet, well, first of all, no one ever exposes a balance sheet for a hedge fund. You're not supposed to, because that's part of your secret sauce. Unless someone inside FTX was uncomfortable with what was going on. I think that's what it was. Either way, whatever case it was, CZ was not happy with Bankman Fried Chicken, and he started basically saying, and this is all within a day or two after this balance sheet just floats across the internet, and people at Twitter start unwinding it, unpacking it, because that's what people on Twitter do, and they realize that there's a good chance that FTX is over their skis. They don't have the money that they say they have because their made-up token they borrowed against for other made-up tokens, and now, here's my personal opinion. They have money. They have enough money. Now, okay, let me back up. This was my personal opinion until 19 minutes ago. And Brandon and I will...
It's verified, too. I just found this on Twitter, too. This is directly from CZ. He said, this afternoon, FTX asked us for our help. There's a significant liquidity crunch to protect. So they haven't made the offer yet. So they signed an LOI to acquire FTX, and this is why you're seeing the market rally in crypto. This is this is it. Like this timed exactly with the reversal today already. So they're gonna potentially acquire FTX because they're in a liquidity crunch right now, and I guess the market really, really loves this. So they're gonna be doing some due diligence over the next few days.
And Chance the investor. Okay, I gotta back up a little bit. I'm not gonna do a victory lap here because I didn't think Sam was a good guy, but I didn't think he was a thief. I still don't think he was a thief, but I didn't even think they were insolvent. My thought had always been, one, Sam never made the money he said he made. That's an absolute dumpster fire lie. Full stop. I nailed that one. But I didn't think he was a creep. I mean, no more than CZ is a creep. They're both sleazy, but I don't think they're thieves, right? So they were never on my thief radar, but they were both on my sleaze radar. The origin story of Sam never made sense, but I didn't think in a trillion years they would get to some kind of leverage insolvency position. Because there's no way an exchange, there's no way a hedge fund, there's no way anybody gets into a situation like this unless you're borrowing against your own crap to buy more crap. It's when you start gambling. An exchange doesn't have to effing gamble. They make fees. An exchange can scale up or scale down because they make fees on trades. It's when you start seeing the insight type of behavior. You remember Insight a few Super Bowls back? I don't know, whenever. It was a completely fake scammy company that had like a male enhancement blue little pill. It was all smoke. They had these big Super Bowl ads. They made tons of money. The whole thing was a scam. The whole thing. It was like, there's Tesla, Nikola, the electric company Nikola. It's all a scam. It's all a scam. And that thing at one time had a higher market cap than Ford for like a few minutes until people were like, what the smoke's going on? This guy, I've never really super liked him or unliked him, but I've always been uncomfortable with him. But I didn't think even he would be stupid enough to let their balance sheet get whacked out. You do not borrow and gamble in crypto. You're either an exchange or you're an investor. And it's when exchanges, like banks, that's why we have Glass-Steagall, banks should not be investing. An investment bank is a different entity than a commercial bank. And I look at an exchange as a commercial bank. When you look at I don't know. What do you think? Am I looking at this wrong? I mean, Brandon, what's your thought? Should an exchange be gambling on the side, or should that be more like a
It's
bank
absurd.
where
An exchange should be, just like you're saying, like a bank. They're making all the fees. Why are they getting so greedy to have to leverage our funds as well and their funds? That's just overreaching and basically putting everybody at risk, which I know that that's probably what they want to do because that they know the state of the crypto market. But when we invest in these exchanges, we should feel safe. We should feel that their sole purpose is to hold our money and just make fees off us. They've told us that's what they're doing. I don't know. They're going too far, above and beyond.
it doesn't
Kinda
make any
makes
sense?
me mad.
So, okay, now I will say this. I was, even before, like, let's go back 22 minutes ago. Brandon and I were talking.
Yeah.
I said, well, I don't think they're insolvent. My guess has always been that Sam is a puppet for other people's money. Because it's still, the money that FTX had still was never explained. And now we may never get an explanation. Because my guess is, I don't know what, I mean, this smells a lot like Celsius to me. It smells just like Celsius. And for anybody that has money on FTX, first of all, you've never listened to me apparently, because I've been telling everyone there's places you never put your money. You never put your money ever on Celsius because the guy's a creep. You never ever put your money in someone else's hands by exposing your passphrase or your private keys, passphrase, whatever. You got to look at these guys and just say something doesn't smell right. The Luna thing from day one, Luna was junk. It didn't make any sense. It never made sense. You can't make 20% out of nothing. I have nothing. Okay, cool. What do I get? Well, here's 20%. Well, how? Because underwear gnomes. Step 1, make UST. Step 2 and step 3, 20% profit. But what's step 2? So you shouldn't have your money on FTX. You should have never, you can't trust these dudes, man. Private wallets make a lot of sense. I like, MetaMask, if you're careful, makes a lot of sense. Coinbase, I think, is safe. Because Coinbase doesn't gamble. Coinbase has a separate entity. So the way you can look at it, like Coinbase has the exchange, and they have a separate entity, which is Coinbase Ventures. FTX supposedly has an exchange, and they have Alameda is their venture side. But apparently all these a-holes are all stuck together. Like, apparently it's just the same glob of stuff. And they made their funny money token, FTT token, which no one, that's absolutist. Most people were not investing in FTT token because it never made sense. Also, no one really was using FTX exchange. I don't know anybody that's serious, anybody that was using that exchange. Brandon, have you even met anybody that's used FTX?
No.
So what happens? Does that mean Ledger X, the derivatives exchange where we buy and sell options, is that going to be, I mean, that's an asset on FTX balance sheet. Is that going to be Binance now?
Yeah. Yep.
Oh, what does that even mean? So FTX had a liquidity problem. Well, that part was surprising to me because I thought these guys can't be that stupid. But wonders never cease. You know what they say? Never ascribe malice when stupidity is a much more likely answer. And really quick, let me just note this. Freddie, he had a situation. He just posted in the chat. He was trying to get some help on a Telegram, and he almost got scammed. Please pay attention that when you get admins asking you for your private key or passphrase, no bueno. Do not ever disclose your private keys or your passphrase to any of your wallets. That's like if you have a Swiss bank account and some dude just calls you up, hey, I'm an admin and I need your Swiss bank account and your login information. You would say, no, that sounds stupid. I'm not going to give you all my secret money. Don't give these people your money, bros, Cephasuses, and whatever pronoun you go by today. Hey, Brandon, what's your pronoun today before we get into markets? What's today's pronoun?
Same as every other day. I don't know. What pronoun do I want?
Okay, well, how do you
FTT.
identify? You identify as FTT?
As a token. I'm a token.
I think it's FK apostrophe D.
Okay. Is that what it is?
So
this is good. But I think we mentioned something a little bit earlier, and I've already seen some comments in the chat, and this was prior to us coming live. A couple of people are about, should we take our money off FTX? I would say, yeah, but
yeah,
obviously. I don't think you should hold, like, if you don't need to, and Nick said this in the past, like usually even Coinbase, I only use typically as some sort of an on-ramp to get my assets onto the blockchain to where I can put them either in my soft wallet, which is MetaMask, or my hard wallet, which I have the, looks like the Ledger. You know what I'm saying? Either you put them either on your hard wallet or your soft wallet, or any other wallet that you have, the Cosmos wallet, anywhere where you want to use those assets. If they're on an exchange, they could be, I don't know, taken away or put into bankruptcy court or something else. So just keep that in mind always, for sure.
Be very careful. Everybody's out to steal all your stuff, and they'll definitely be out to steal it when these markets turn the other direction, which we're not there yet. There's a lot of macro. There's a lot of the Fed is at it again. This time it looks like they're going to start a program where they're going to start buying off-the-run treasuries and replace them with and issue more on-the-run treasuries, which probably is good. The liquidity characteristics of off-the-run treasuries, off-the-run, bills, notes, and bonds. Well, notes and bonds, obviously they're not as liquid, and in repo. And I know that this is in the weeds for some of you. For the heavyweights, we talk about this quite a bit. But in the repo market, the biggest lending market in the world, where hedge funds, governments, banks, everybody comes to lend and do a bunch of balance sheet machinations. The on the run treasuries, short expiration on the run treasuries are the pristine of the pristine, because they can be instantly or very quickly liquidated. You have older, like notes, bonds, things like that. We start going out 3-year, 5-year, 10-year, 30-year, and halfway through the duration of those notes and bonds, they're no longer on the run. And so the problem is they have the yield characteristics like 5 years into a 10-year. Okay. That 5-year, even though there's 5 years left, it has the yield characteristics of when it was purchased. Does that make sense? And so it's less liquid than newer on the run issued treasuries. And again, in repo, when lending and borrowing and pledging and repledging, what's called rehypothecation, all that matters is the liquidity characteristics of your collateral. And again, if you really want to dig into this, I urge everyone to go listen to Jeff Snyder and Emil Kalinowski, because Jeff really just focuses. He is the king of the Fed and the Treasury, but all that matters for collateral. So Brandon, if you and I are trading, I say, Brandon, I need to borrow $10,000. What's your question?
What are you using it for, buddy?
Stuff.
Really?
And then you might say, well, if you're going to give me 10,000, what do I got to give you?
Yeah, what do I get in return for this measly 10,000 that I obviously have?
The collateral question, right? And so I say, okay, Brandon, I'm going to give you a bunch of cat fur, lots of it.
Oh, okay, worthless.
And you might, and your team of people, they might say, what are the liquidity characteristics of that fur? Can I sell that? Because all you care about is, can you sell that fur and get your 10K back? There's not a good market for, you guys will probably be surprised. The market for old cat fur is not what it used to be.
It's dried up. Get it?
Yes. So what you want as a lender is quality collateral with liquidity availability. So I want to be able to melt that stuff down. If I give him gold, he can melt that gold, or he can go sell that gold. Good liquidity characteristics. If I give him some old random painting and stuff like that, okay, maybe there's value there, but it's less liquid. There's less buyers. And so you see where this goes. Anyway, so there is the potential that the treasury market, the off-the-run treasury assets, bills, notes, and bonds, would be less tradable because worse liquidity characteristics, and that those markets could get some no-bid markets in certain situations. So they're going in there. At least this is what they're talking about. So it's not for sure, but the plan is they may go in and start selling on the run short-term bills, and then using that money to go and buy up some of the older off-the-run notes and bonds. We'll see what happens. The cat fur of the treasury market. Yes. So there's that. So that's there. Did the Fed pivot? Well, they're stuck between a bad economy and quasi-fake numbers. So think about the mindset of the aggregate investor. Now, we're going way macro right now, but this is important because macro is kind of is leading the overall sentiment in all these markets. Okay. And I need the chat to participate. Brandon, I'm going to need you to participate. Okay. The Fed is raising rates. Now, let's forget that it only applies to some banks. Let's forget that it's not actually tightening. It's not really tightening. It's actually easing, because they're doing the reverse of easing, which is strip mining quality collateral, which is actually tightening. Forget all about the real way it works. Let's just go with the way people think that it works. And the way people think it works is tightening slows a growing economy. And by doing that, lending starts to recede. Ideally, you're a softer landing. All right. So why would the Fed stop tightening? Well, if they got confirmation, at least whatever they would use as confirmation, that the economy is actually going into recession and not overheating, like for whatever reason they still keep saying. So as a trader, are you happy that the Fed pretty much is talking or has intimated they are pivoting, and that the tightening is going to, not untightening, but dis-tightening, right? Less tightening. So maybe they did 75 basis points. Maybe they go to 50. Maybe they pause for. So as an investor, are you excited that the tightening may be coming to an end? It's not loosening. It's not loosening. It's just dis-tightening, like disinflation. Because if you're excited, then the slower pace of tightening is a kind of weird, it's not easing, but it's not tightening as much. The noose is loosening. So you're like, yeah, except that if that's the case, that means that means that they're admitting that we're in recession, going into recession. And in going into recession, are you going to be making money in equities? No. So if they then start to ease because we're in a recession and they're trying to spur growth, they're easing then into recession. Good for equities that were easing, bad for equities that were in a recession. But we've been in a recession. Been in a recession since before COVID. A little bit of funny money on the side doesn't make a difference. So that's the problem. People are trying to weigh right now. What do you think, Brandon? Do you go, when you hear the Fed's easing, does that make you feel more bullish, more excited about equities and things like that?
Irrelevant to my life, really. I mean, honestly, no.
But do you see that there tends to be a kind of sentiment to that effect? The Fed's printing money, therefore we should own equities.
All you're doing at that point is following the sheep, right? That's all you're doing.
Yep.
So you're basically following the rest of the market.
And member 0000691851137, that's absolutely correct. It doesn't reduce inflation. It doesn't have anything to do with inflation. They don't fight inflation. They don't have the tools to fight inflation. They've already admitted this more times than anyone can count. But yeah, Cisco, I think the general thought is Fed easing equals happiness. Fed easing equals bullish. Fed easing equals let's go into equities. We got to keep up. You don't want to watch the equity market go crazy and you're not a part of it. Otherwise, you get left behind. Then the equity space FOMO kicks in. But it is all flawed. The business cycles dominate, not the Fed and not the other central banks either. They're already signaling that they're going to have to go the other direction. Some central banks, really, if you look at some of their little side hustles, they are easing. They've already gone the other way. So, the macro is important. And other people are like, well, yeah, let's talk crypto. Crypto, yes, crypto is incredibly important for crypto investors, for the 7 of us that invest in the crypto space, the digital asset space. And we're probably going to inherit most of the planet Earth as artificial and artificial general intelligence eats the world, in Dr. Gortzel's words. But the macro picture, which is the Bitcoins and let's say your top 20, 30 assets, the aggregate investor, the aggregate big investor, not me and you, not Joe Sixpack, but the institutions that are working their way in, the hedge funds that are working their way in, the other investment houses, small and large, they're more macro players. And the macro players are looking at the macro picture. And so the way that they look at the world is very important. And I'm not sure right now which way they look at the world. Because if you're easing to get yourself out of a recession, Fed still hasn't admitted that we're in a recession. But if you're easing to get out of a recession and get animal spirits going, then you're saying, yes, we have a recession and we're at the end of a growth and credit cycle. And yet we're also going to strip mine quality collateral. And real quick, Tom is doing a project today and we are going to be going an extra 30 minutes. So for those of you that hate me, I apologize. You can use this time in the chat to curse me out. But for those of you that don't.
I thought, yeah, this is good though. This is good though, Nick, because we still have a lot of questions in the chat and we also have a lot of comments that I kind of want to go over. So this is actually good that we have this extra time.
So let's do this. Brandon, why don't you start spitfiring questions? And let's just try to get everybody's questions. Yeah, let's try to get some Q's and A's.
So a couple of the questions that I saw in the chat were about AGIX. So this first question right here, this is from, it looks like R. Quimby. Hello, Nick. Any news on the best course of action with AGIX now that new net drop is complete?
So I would say keep your AGIX on MetaMask. If you have, this will apply to a few of you, if you have more than, say, 250,000 tokens, start spreading it into different accounts. With MetaMask, you can launch different wallets inside the same wallet. You can add other wallets. You just simply add other wallets, put some Ethereum in there, and it's fueled and ready to go. I say keep 0.1 Ethereum, 0.1, a tenth, 10 basis points of Ethereum in every wallet to keep for funding activities, because it takes Ethereum to fund transactions. That's the gas, that's the electricity, however you want to look at it. So with AGIX, to get the benefit, at least from what I've discovered, because there's a little bit of whale fishing there, whale hunting, where people with more AGIX tend to receive a little bit less percentage-wise of the airdrops. I experienced this, and then I moved my wallets. I created a bunch of wallets. I think I have, it doesn't matter. I have many wallets, and I limit it to about 250K each wallet. And that gets me the best, kind of the best overall distribution. So this, we're just waiting for the next announcement. I don't know if it's Mindplex. I think it may be Mindplex, Rejuve, Sophia DAO, Hypercycle, Cogito. All of these are coming. There's like 10 or 12 more companies that they're launching. And they take 5% of each project and distribute those to us as AGIX holders. So I would say have your wallets. Again, be careful with your passphrase, key phrase, and all that. And either be staking. Now, let me tell you this. Staking, you will be able to stake AGIX. I keep getting the weirdest. You will be able to stake AGIX through Singularity DAO here in just a few weeks. And I think the payoff will probably be much more. Right now, you get 1% at Singularity Net. If you go straight to Singularity Net, if you're staking from MetaMask to Singularity Net, you get 1%. I think you will be able to get through Cardano probably 1.5%, 2%, 3%. Ben is very smart. Dr. Gortzel is very smart. He's not just spraying tokens on the planet. They do just enough to keep funding activities consistent. So I'm interested, but I'm betting it'll be double what it is. Either way, right now, keep your AGIX on MetaMask.
Everything on MetaMask. All right,
man.
Coinbase. We got Vermilion. Here's the next do staking. I have Fetch and others in Coinbase. If I move them to Coinbase Wallet, will they then get rewards from staking? I do have a KuCoin account, but it's a hard time navigating in and around.
Coinbase Wallet is it's something they bought and taped on, and it's got in my opinion, very little utility. I've had people that have a lot of problems moving stuff around.
It's duct tape. It doesn't work for pretty much whenever you try to connect to sites, it either it's really struggles. It does struggle, but
it's just clunky and it's clunky and bullcrappy. And it was something that they just bought. They just bought and taped on because they're like, well, we need a MetaMask. Only MetaMask is run by people that are very close and intimate with Ethereum. And at least while that, I'm not so happy with Ethereum, but I'm certainly not trusting Coinbase to have some taped on duct tape project to compete with MetaMask, because Coinbase Wallet is not competition for MetaMask. They're just not the same product. So no.
Yeah. Oh yeah.
Don't leverage it. If you have Ethereum assets, and I don't want to go down the rabbit hole, but MetaMask supports other layer 2s and things like that as well, right? Like Harmony One, they're supported through MetaMask. Polygon, which signing every single deal on the planet. I almost this morning, I almost swapped out a big chunk of Ethereum for Matic when Matic kind of dove. It was down around 110 for a second, and I was like, ooh. So I think if Ethereum gets back to 1,600, I'm gonna have to think about this, but I may do some swapping out into Matic. I have a pretty big position in Matic. Actually, my Matic and Ethereum position right now they're like dead nuts even. I just don't know. I don't know if I believe in Ethereum's future the way I do think in Matic's future. And I think the people at Ethereum don't believe in Ethereum's future the way that we seem to believe in Matic's future. So that's going to be something I will have to contend and grapple with. We'll talk more about that in the heavyweights tomorrow.
Vitalik has been acting a little bit like he's trying to do stuff lately, a little bit more than he has in the past. But yeah, I don't know. We'll see what happens here. Let's get on to the next question here.
Yep, next question. And for those of you, real quick, for those just joining us, Tom is on a project. He's on a special assignment. And so we are going to belligerently use his time to push crypto. All right, off we go.
All right. Do you have an idea why crypto often goes down on Mondays and Thursdays when miners sell?
Well, I don't know if those are correlated. I don't think it's a causal relationship. I mean, if you have Bitcoin miners that are earning Bitcoin and they have to run business operations, they have to sell. They don't have a choice. It's like when the bill comes for your electricity, you pay that one. There's all sorts of bills you might not pay. You might hide your car in an alley or a garage and hope the repo man doesn't come. You paying that electric bill, bro, you paying. And so I think it's when you run, a lot of times I don't think people realize that there's an incredible capital cost and ongoing costs and manpower costs of running these Bitcoin mining facilities and running all these machines and keeping them and rolling them over into newer machines and being able to compete with your peers on hash power and all this, which I think it's great, and it's also a mess. And it probably, I don't know, that gets into a different discussion about, but anyway, there's just a lot of costs to being a Bitcoin miner and just a cryptocurrency miner in general, right? Not a stake pool operator, that's relatively inexpensive, but being a Bitcoin miner is incredibly expensive, and therefore you got to pay the light bills, bro, because if you don't pay the light bill, there is no mining. Your business doesn't exist. So there are certain fixed or relatively fixed costs you can't get away from. So when they unearth any Bitcoin, as they earn Bitcoin, they're always selling. And it isn't only Monday and Thursday when they sell. Now, because there's not like Monday and Thursday they get paid. They get paid every 10 minutes. With every block that goes by in Bitcoin, they're getting paid. So they have cycles that have to do with their own internal payment cycles and when they make payroll and things like that. I don't think there's anything magical about Monday and Thursday other than there may be some human psychology involved where people hate Mondays. I like Thursdays. I think Thursdays are cool because Thursday is Friday's Friday, right? Does that make sense? Thursday is Friday's Friday. It's like the Friday of Friday.
I guess. Now that you mention it, I've never thought of it that way. But Jeannie has a good question here. This is the same type of question that I have, Nick, so I hope you can answer this effectively. This is a very important one. What's the minimum amount of money that I need to invest in my portfolio to make a significant amount of money, like $1 million? Nick, I just want to make sure that I'm making a difference here. I want to make sure that I'm making a difference.
We love you, but that's a flawed question. And and a lot of people ask it, but that's not really the right way to think about it. It's not the minimum amount of money because that's going to be different for every single person. It's the kind of return you expect with whatever amount of money, whether it's $1 or $1 trillion, is still the return on that investment. So the amount of money is whatever you're comfortable with that you can sleep at night. It's not going to stress you out. If it stresses you out, you put too much in, right? And if you're feeling FOMO, that can make you do silly things. One of the things that we study a lot in the heavyweights is cognitive bias and the psychology behind, deviations in rational thinking. And so don't think, oh, well, if I had $100, I'd make X amount, but if I had $1,000, I'd make, obviously, if you could start with $1 trillion or $1 million, what's the saying? You want to make $1 million in Vegas? Go to Vegas with 2 million.
That's right.
Don't think of it. Yeah, that's right. Thursday is Friday Eve. Think of it like this. I'm going to take a certain amount of money that I'm comfortable with putting in a very volatile, dangerous place where everyone's out to get me. On the other side of it, if I play it right, I'll make more money than I could ever make in 5 lifetimes in the equity space, in 75 lifetimes trading options, in 230,000 you see what I'm saying? This is a new asset class, not a new asset. It's not tech. The crypto space is not tech. It's not the tech boom. It's a new asset class. And the last one was in 1696. It was the bond market when the English, they had funding requirements to go fight the French. Little did they know, all you had to do is scream at them and they would drop their weapons. But before they knew how weak the spirit de vivre of the French were, they needed money. So they created the bond market, war bonds. Look how big the bond market got. It's the biggest freaking funding market on the planet. Every government uses it. Every corporation uses it. It's massive. This is that. Digital assets, crypto assets, and AI underneath it are going to eat the whole effing planet. if you don't get this, you're going to be really unhappy about 5 years from now, because isn't an if, it's a when. It isn't a maybe, well, I'm not sure, crypto. No, that's over with. We're past all that. And the people that are sitting on the sidelines, it's kind of the same thing. We're talking to Ben. I said, what chance does a human have 5 years from now trading against robots? He says, well, humans don't have a chance already. They're already obviated from competing in markets. Why? Because about 90% of these markets, equity included, are algorithms, quants, and quant systems, networks of algos and quants trading. The other 10% is idiots like us trying to trade in and out based on graphs and charts and skewy lines that don't make any sense, because we're not better than all of the compute power in the world. We're just not. We're humans. Everything you see reading a chart has already been seen and traded against. And maybe you can be like the little fish near the whale and like get some little pieces. But you will never acquire wealth that way. You'll maybe make your life a little bit better. It's just not realistic. People have to have a come to Jesus. Maybe not Jesus. Maybe it's the Dark Lord Satan. Maybe it's a come to Nancy Pelosi, which I guess is the same as Satan. But people have to wake up. AI is eating the world. This is happening. It's not a maybe. This is happening. And so if your strategy is, I'm going to trade in and out of this and that, no. If your strategy is, I've got $17, how much can I make off 17? That's also not right. You need to say, look, I just want to go from a point A where I'm at right now, and I want point B to be better. And I want to look all around the world and look at the place where my currency units have the greatest chance for a consistent return on investment, while at the same time not ruining my life with stress and psychosis and neuropathology. So the only place, look, man, if there was another market to trade, I would be trading that. If matchsticks and cat fur was a market and I thought there was more to be made there, we would be having a cat fur and matchsticks show. It'd be cat fur heavyweights, right? But it's not. It's digital heavyweights, because this is where the world's going. And as an investor, as a trader, good luck. Your days are numbered. Good luck. I hope you make enough in the next 2 or 3 years to retire for the next 100 years. Because, guess what? Another eventuality is that we're going to get to some kind of longevity escape velocity. Most of us here will go past 100. Some of us here will go past 200. Yeah, right now everybody's like, oh, that's ridiculous. Yeah, well, we'll see how ridiculous it is in 5 or 6 years when artificial intelligence has completely mapped human biology and can truncate lifetime experiments into a fraction of a second. And every second it can run hundreds of millions of life experiments with different biology and different pharmacology. And by the time you wake up, the knowledge we know tomorrow morning is 100,000 years further biologically because of sandbox testing and simulations than it is right now. Humans are real bad at exponential growth kind of propagation, at making those estimations. But yet we see it. So it's like, okay, think. Can I trade squiggly lines and make enough? And this is in crypto too. I'm not badgering equities or any other market. I'm just saying, can you trade in and out enough to make enough money to last you and your family 100 years from now? I don't think the answer is yes. Especially when in the next 5 to 7 years, you won't be trading. That's over with. Robots will be trading. You either own the robots and own the ecosystem, which you can do in the crypto space, and you cannot do. I had a buddy of mine, we were watching a movie, and he said, well, why is crypto so cool? Like, why would I want the coin when I could just own Apple? I go, you don't want to own Apple stock. Ideally, you'd want to own iOS, and they ain't selling shares of that. Owning in the digital asset space, owning these protocols, as an example, is like owning iOS or owning a bit of the Play Store or owning the electricity at an electric company. And as it moves around, you get paid fees. If that doesn't sink in, I don't know. Maybe I need to reframe my arguments. You own the infrastructure. You own the goo that is consumed. You own the gas. You own all of these things that we can't own in the equity market, that we can't own in any other market. You own the energy. Whatever your best analogy is. How would you explain it, Brandon? Kind of owning crypto, to me, it's better than owning equity because I'm a participant in transactions. How would you kind of explain it if someone was asking you, like, why do you like the tokens versus like owning equity in Apple?
Yeah, I mean, I feel like I have more ownerships. I don't. You said it all, kind of. You feel
I
like
feel
you're
like
part of the system.
you're a participant. So
Yeah,
to be
you're actually
a participant, I mean, if Apple sold shares in iOS and you actually owned shares in iOS, that product, and then you got money when all of the apps in the Apple store were doing stuff, like every time you use your phone, every time you do a transaction, I got a little piece of that, that would be dope. But that's not the way the world works, is it? And for those people that were trading Amazon, how'd that work out for you? This is a rhetorical question. You got nuked because you went in and out, gaining 12% here, 6% there, 30% there, 14% there. And then the stock went up 2,400x. And you were like, oh, crap. I missed that. Yeah, you missed that. You missed the big life-changing moves by trading. Now, I'm not saying trading is bad. I'm saying trading is very finite. Trading has finite, it's a specific time, it's a specific goal, it's finite. You want to have infinite goals that propagate out far, far, far into the future. Does that make sense? Right. In it to win it. You made money doing puts on Amazon, but not as much if you just own the stock outright because you can't keep up with the growth. You can't. Selling puts is great with a portion of your portfolio. I know guys that make their whole career on selling puts, but they would have made 50 times more if they'd owned the asset. Problem is you don't know which assets to own. But in the digital asset space, in the crypto space, there's a handful of assets. And with the right bucket of assets, you've essentially indexed yourself in to the front runners. You're buying all the horses in the Kentucky Derby. And you're just like, okay, cool. Whoever wins, I win. Because whoever runs ahead, the next Google, Apple, Amazon, Facebook, whatever the fangs of the future, the digital version of that is, you're going to win so disproportionately to the rest of the planet, to the rest of the investable assets, that it won't matter that a couple of these you're going to have to cut loose. And you see it in real time, unlike the equity space, where we listen to a bunch of blagging and BS, and every quarter we get their statement, and now we have to go back and read, like, what are they saying? What were they not saying? Why should I have to wait 3 months to find out a company's a scam or that they're insolvent? In the crypto space, just like we saw this morning, you knew right now at 8:19. When did that come through, Brandon? Was that like 8:19, right? 8:19. So 11 minutes before the show started, something like that. We knew that everything from yesterday changed. Everything from the last 3 years. FTX is all smoke and mirrors. They were in trouble, big trouble, and it looks like Binance bailed them out. We didn't have that information yesterday. We have it at 8:19 this morning. In the equity space, we'll wait a quarter, or we'll hear their spin on it on CNBC. No, bro. Yeah. Well, we know it's revert. Yes, Kip, because we knew that the implications of this, while it gave the market a little breather, Brandon and I talked about this. This isn't really a positive thing. It's positive because investors are protected, but it's not positive because, yet again, an exchange has pulled the wool. Not only that, Bankman Fried Chicken, this dude was on CNBC, which is another warning sign. These same dudes, who do you see on CNBC? These repeated dudes, Michael Saylor, creep. Novogratz, sketch. Probably not a creep, but definitely some some interesting behavior. Kramer used to be a nice guy till they put a choker on him and started making him sing like a little monkey, bang his little stupid drums. He doesn't have his own free thoughts anymore. You look at the people they parrot out. 1 in 20 of them are decent people. The rest, because you don't go on CNBC when you're getting things right. You go on CNBC when you have to talk your book. And this is not just CNBC, but this is this kind of media junk in general. You go out there to talk about the amazing things you're doing. Chamath, you go out there and you say disruptor 432 times. And people, oh my God, this guy, he's in disruptors, SPACs. He's a disruptor. What does that even mean? Disruptor. What? Oh, disrupt what? We're disrupting banking. With what? Fur? You're going to sell fur? That's my gig, bro. I'm selling fur. I'm going to offer. Who wants fur token? Brandon, I know you're in. Are you in for 10 ETH? Fur token.
10 ETH, yeah. It's already on the way. Transaction.
Sweet. I'm going to back every fur token 1-to-1 with some of my cat fur. I got it. Some of it's in the lint thing in my Dyson vacuum. But trust me, it's 1-for-1 backed by fur. You guys in? Who's in? Let me know in the chat. You guys in for some fur coin? How gross is that? I mean, the good thing is she's a serval hybrid, so the fur, it will not make you it's hypoallergenic fur, so I guess that's a good thing. So it's like I'm almost ESG compliant. Kip, that's actually a perfect anyway, okay. I think we had 1 or 2 more questions. Am I right, Brandon?
I think we might be out of questions, but this is, oh my gosh, we haven't done the markets yet, and we also haven't, like, there's so much stuff with this FTX thing. The markets have, like, absolutely been wrecked again. So this seems like more of everybody doesn't know what to do with this news. This is kind of crazy. The markets have pummeled back down to where they were before they announced they were going to do like a buyout or whatever. But it seems like, and I'm just reading some information here, it looks like CZ was the one who originally saw FTX's balance sheet. He's the one who originally leaked the balance sheet, obviously. And so he's the one that actually created this space where FTX looked super bad. Then he claimed he was going to sell all their tokens to make them look even worse. And now they're like, well, crap, if that happens, we're going to be liquidated. So it left them in a spot where they had to be bought for cheap. So now he's going to lowball an offer over. And what do they have to do but take that lowball offer?
They can't.
This is a power play. This is like a mind-bending event going on right now. And the markets are kind of like,
Well, here's what it was.
It's noon.
Sleazy CZ is the real deal, and Sam is not. And when push came to shove, CZ could back his play, and Sam could not. And again, we don't know for sure, but it looks like FTX was using their made-up funny money token as collateral against a bunch of other weird business operations, which is always dangerous. You don't borrow illiquid assets. This is what the great monetary crisis of 2008 was all about. Taking illiquid assets, trying to prop them up as something quality with good liquidity characteristics, and then borrowing against them, pledging them into repo and other markets when they should have just been classified as uninvestable, illiquid assets that need to just sit on a balance sheet as an asterisk, not to borrow against. You can't borrow against cat fur. Listen, anybody who wants to loan me money against cat fur, please email me. I'll take you up on it. I got lots of it. This is that. It looks like, and we'll know more in the future, because it looks like FTX is pretty much finished. What I want to see more than FTX, I don't really care that FTX, I guess I'm glad they're gone, or will be gone and be owned, whatever, by Binance. That's fine. I'm more interested in who owned FTX. And that's a question we won't be able to answer just yet. So we will see. Stay vigilant, peeps. This could be some fun market. Listen, red markets for us are great. They are investable. We got time. It means we have time. I don't like green markets, not yet. Let's wait till the spring. Let's wait till. Anyway, we'll see you tomorrow on Digital Heavyweights. We'll get into the nitty gritty. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk, strung out on meth grandmother, or Brandon, or Tom, or Sam Bankman Fried Chicken, or Nancy Pelosi wouldn't do. And on that note, I bid you a pew pew. Pew pew.
Hey, we talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay.